Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Friday. It's the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Everybody had an absolutely amazing trading day yesterday. For those of you new to the channel, take a look at the subscribe button down below. Smack it. Hit that little bell for notifications. Whack that one. And then if you're not new, do me a favor, leave a comment, leave a like, leave something. Let the computers know that you are indeed watching the DMC. All right, let's dive right in. S&P this morning, we're up 17 points. Nice rally, moving a bit higher. 17 points sounds like a whole lot, and 17 points would have been a lot a few months ago, but 17 points in the morning isn't really that big of a deal anymore. In the S&P, as our volatility has been significantly higher. Yesterday in our daily in our live trading rooms, we had the live trading room yesterday at TradersArmy.com. One of the things that I said is you don't have to trade every day. And we've had a pretty good week catching some pretty strong swings. And my feeling yesterday was that we were going to kind of be choppy, and that's exactly kind of what we had. There was a fair amount of chop yesterday. Now I will say that what we're seeing today is that this level of supply is being tested again, and we're basing around inside of it. So that actually usually holds for a potential breakout. And so if you are so inclined, I think there's an opportunity to get long above this region here. And you'll see that actually a bit better in the Nasdaq trade here we have coming up in a minute. Now, there's some areas here that are some resistance above us, but I think you could get long above that area there if you trade the breakout style. Now, in the Nasdaq, I actually had a short setup on a confirmation entry. And the reason it was a confirmation entry was because we had already hit it once and got a really nice move away, and we've come back to it a second time. But notice the basing before the level. We've come into the level, and now we've kind of been sideways for a while. So, this might have been enough to get you in the short. Realistically, for me, this isn't enough. Even if you are in the short, you don't want to stay in the short, because remember our 6 candlestick rule. We came into here and then 1, 2, 3, 4. It was 5 candles before we even would have been triggered on an entry, and then the next 4 candles have done nothing. So if you did get short, you're looking at a very small loss at this point, not a big deal, because I don't feel like it makes sense to stay in one of those positions now. But this exactly is what we look for when we look for a potential breakout, right? A level that's been tested a number of times where we're chopping around. So if you're so inclined, I think you could get a breakout back to the upside. I would also be okay with understanding that it's Friday and we may have some movements that you don't want to hold something over a weekend, and if so, then that's the case. But there's a case to make, have price trade all the way up to here over the course of early next week, especially. Looking at crude, so looking at crude oil, we are still in between our areas of demand and supply. Nothing has really given us super high probability turning point trades. Yesterday when we were looking at it, I was looking at in the morning about this time of the day and said that this wasn't a great supply area, which price came into it, chopped down, and then eventually broke through it. The next levels up here, none of those were phenomenal levels. And so now, we have come off of the European Open with a little bit of strength. If you want to join this little short, I think it's best to wait for some sort of a rally back up. When we think of this as maybe the start of a move down, and we would wait for a little bit of a rally back up into a supply area before we would attempt to even think about getting short. For me, what I think makes the most sense at this point, our 4 hours are kind of inconclusive. I think it's best to wait for some of these bigger picture levels outside of this range, outside of this band. In gold, so taking a look at gold. So in gold, we have a little bit of a supply area up above. Now, yesterday, I kind of felt like we had a bit of a breakdown from this area. I thought we'd get a little reversal here in gold. Actually, it was a trade. We took the trade in class. and it did not go our way. You know, one of the things that we do is we try to take trades in class, and this was a pretty decent setup where we had this little move down, a pretty decent setup. Price came into the level, gave us a little bit of a move away, came back up, and then wound up hitting the stop out here pretty quickly, which I'm okay with, right? I will take. I mean, and when you look at this level was, you know, 1280 half by 1281.6. I think my stop was at 1282. It was 1.5 points. I'll take 1.5 point misses in order for, you know, for those wins that come through occasionally. And you know, and for me, I'm the kind of trader that I'll take 2-to-1 wins quite regularly. You know, people talk a lot about letting profits run, and I do agree in letting profits run, but not all of them. And I want to take some money off the table at that 2-to-1 mark is usually a big deal for me. So when I have a 1.5 point risk, you know, it's not gonna blow up my account if I have 1.5 point risk, so long as I am still managing my position size effectively. Now, what am I looking for today? Well, we are definitely, you know, in more of an upward trending motion. I've got a 15-minute level up above here, and that 1289, 1290 area, which we're not quite there yet, and there could be a case to get long up until we get to that region. So I would need a pullback to quality demand, but once again, a lot like crude oil, I'm not getting super high probability levels. Once again, there's nothing that says you have to trade every day. Moving over to bonds and our currency markets. So in the ZN, we have a little level right in here. Price has actually come into our reversal level. We've gotten a little bit of a move away, and then it's just kind of chopping back down. And so, you know, think about it, 1, 2, 3, 4, 5, 6 candles. It's not really made the move we would expect it to make. So if you did get long, take your stop, move it back to break even in this case. In the Aussie, so in the Aussie position, we have a supply level up above us coming to on the 15-minute. It's a confirmation supply level, so a little bit lower probability. And remembering that those lower probability levels, that's why it's confirmation. My only fear is that if this basing continues before the level, that's going to invalidate the trade. Basing before a level invalidates a trade because it does two things. One, it changes the arrival score. You know, we use a trade optimization plan in order to plan our trades effectively, and it lowers the arrival score and it lowers the score on reward to risk. And so with that, you know, with that being said, I may not take it if we base around. Still okay at the moment because this hasn't put in true opposing demand. But if we come into here and we activate the trade, I need at least a 2-to-1 reward to risk before I'm going to be willing to get into that thing. On the euro. So we had a pretty nice euro trade yesterday in the room. It was this little wick over wick level right here. Price came up, you know, gave us a little bit of a tick above, but not enough for a stop out, and then a very strong move away. So, but that level's been spent, right? We traded all the way to the top of it, so we can't use that one again, unfortunately, because that was a really strong move away. But typically when you see those 3 red speed candles, those will get refilled. And I think that we'll probably wind up refilling this whole area. So when I go to this 15-minute chart, I would look for a place to get long on some sort of a retest, and I think that we may get that somewhere down here today. If you see those speed candles getting, you know, getting refilled, that would be where that would happen. Canadian dollar. In the Canadian, we had a really nice little touch and go trade off of this level. We then converted it to a confirmation entry, but notice the basing we're getting before the level. The basing before the level makes this not valid for me any longer. With too much basing, makes that trade completely invalid for me. Finally, last but certainly not least, Great British Pound, Japanese Yen. The yen has continued its sideways movement, not a whole lot occurring, and so I'm not going to force that one. And then the Great British Pound, we actually had a really nice reversal setup, which we were not able to trade back into yesterday. I really felt good about it when we were setting it up. I thought, you know what, we'll make it back to here. Psych, we didn't make it back. Price rallied up out of that level. Level's still valid, though. I'm going to leave that one in play. So hope you guys all have a great weekend. For those of you that are that are Traders Army subscribers, Sunday night we will have our live trading room. For those of you that are not, go to tradersarmy.com, learn a little bit more, and join us in our live trading room on Sunday. All right, guys, hope you have a great weekend, and I will